Have you ever wondered, how do some people make billions from clicking a mouse? Someone making $1 billion in a single day, just by placing a bet against a currency? Or using math and computer codes to make money while they sleep? While the rest of us lose money trying to buy a stock on Reddit? What if I told you there are traders who made more in a day than most people make in a lifetime? And here's the crazy part, they didn't do it with luck. They used smart strategies, deep psychology, and even bent the entire market to their will. In this video, we're diving deep into the lives and strategies of the 3 most profitable traders in financial history. This isn't motivational fluff, this is real. With real names, real techniques, and maybe, if you pay close attention, you'll learn how to think like a billionaire trader. Number 3. Jim Simons, the Quant King. Now, if you think Soros and Jones are smart, meet Jim Simons, a former math professor and Cold War codebreaker who became the most successful trader in history. How successful? His hedge fund Renaissance Technologies averaged 66% annual returns for more than 2 decades. That's not a typo. And here's the wild part, he didn't know much about finance when he started. Simons built a team of mathematicians, physicists, and data scientists. Not your typical Wall Street crowd. Instead of watching CNBC or reading the news, they looked at millions of data points and built algorithms to predict price movements with mind-blowing accuracy. He trades everything: stocks, commodities, futures, currencies, but all through quantitative models. No emotions, no opinions, just math. Simon's fund is called Medallion Fund, and it's so profitable, it's closed to outside investors. Only employees can invest in it now. That's how exclusive it is. His strategy: Jim Simons uses algorithmic trading. That means he builds computer models that can detect patterns in price movements, predict short-term opportunities, execute thousands of trades per second. He believes in finding anomalies, tiny inconsistencies in how markets behave, and profiting from them over and over again. And because these trades happen in milliseconds, he doesn't need big moves. He just needs high probability and precision. Fun fact, even though he's one of the richest people in the world, Simons still donates billions to scientific research, especially math and autism research. He's a true genius who actually makes the world better. Number 2. Paul Tudor Jones, the man who predicted black. Monday next up is Paul Tudor Jones. If Soros is the professor of trading, Paul is the warrior. He's not just rich, he's respected by everyone on Wall Street. He became a legend when he predicted the 1987 stock market crash, also known as Black Monday, and made over 100% profit while the rest of the world lost their shirts. Let me paint the picture. On October 19, 1987, the stock market crashed by over 22% in a single day. That's like the entire S&P 500 being wiped out before lunch. But Paul Tudor Jones didn't panic. He had already seen it coming. Using technical analysis and pattern recognition, he realized that the market was overheating. The charts looked eerily similar to the crash of 1929. He bet big against the market using futures contracts, and when the crash happened, he turned millions into hundreds of millions. His strategy? Jones believes in capital preservation first. He famously said, "Don't focus on making money, focus on protecting what you have." He uses a mix of technical analysis, chart patterns, moving averages, macro analysis, interest rates, inflation, central banks, and tight risk management, sometimes risking just 1% of his capital per trade. What's unique about Paul is his emotional control. He's big on discipline and mindfulness. He even practices meditation and visualizes success, saying it keeps his mind sharp and emotions calm. Fun fact: he once turned down a job at Goldman Sachs in the early days because he wanted freedom and control over his trading decisions. Number 1. George Soros, the man who broke the Bank of England. Okay, let's start with a legend. George Soros isn't just famous in the trading world, he's infamous. Back in 1992, he did something so shocking that newspapers around the world called him the man who broke the Bank of England. And no, that's not a metaphor. He actually forced the British government to surrender in a currency war and made $1 billion in a single day. So how did Soros make his money? He made most of his profits in the foreign exchange forex market. This is where traders buy and sell currencies like the US dollar, British pound, or Japanese yen. Now here's what happened in 1992. Soros believed that the British pound was too strong and wouldn't survive in something called the European Exchange Rate Mechanism, ERM. This was a system where several European countries tried to keep their currencies stable before creating the euro. Soros studied economic policies, interest rates, and realized Britain couldn't keep up. So, he used his hedge fund to short-sell the pound, meaning he bet it would fall in value. He borrowed pounds and sold them, planning to buy them back later at a lower price. And he was right. The British government tried everything to stop the pound from crashing, raising interest rates, spending billions to defend the currency, but nothing worked. Eventually, they gave up. The pound dropped. And Soros? He walked away with $1 billion in profits. In total, his hedge fund, the Quantum Fund, returned more than 30% annually for decades. That's unheard of. His strategy. Soros combines macroeconomic analysis with psychological timing. He believes that markets are often irrational and driven by human behavior, not logic. He calls it reflexivity, the idea that perception can shape reality. He looks for situations where the market is wrong and bets against it. Fun fact, Soros once lost $2 billion in the tech bubble crash and still came out richer in the long run because he knows when to cut losses. So there you have it, the three biggest, baddest, and most profitable traders in financial history. George Soros, the master of macro bets. Paul Tudor Jones, the disciplined chart reader Jim Simons, the math wizard of Wall Street. They all became legends in completely different ways, but they share one thing. They never gambled. They played a smart, calculated game and played it better than anyone else. So the next time you hear someone brag about YOLOing into Dogecoin, ask yourself, do I want to be lucky or do I want to be legendary? Thanks for watching. If you found this video helpful, hit that like button, subscribe for more smart financial content, and drop a comment who's your favorite trader of all time. Until next time, trade smart, live free.